All right, everyone, and welcome to our stock analysis on Facebook. This session is meant to give you more insight into the level of technical skills applied by Wall Street professionals when it comes to evaluating a stock. And here today we have one of our alumni and student analysts in the program that put together an entire presentation on Facebook. And I'm going to first give you more of a rundown of our three-step process in evaluating a stock and assessing the situation to give you a more framework or simple approach that you can apply to any stock that you may have in your portfolio, or if you are evaluating a company for a class, an interview, I think it would give you a really good structure on how to go about it. So with that being said, hi Jess, how are you?
Good. Thank you for having me today. Hello, everyone. My name is Jess. I am a junior at the University of Pittsburgh, majoring in finance and minoring in French. It is my pleasure to be here today.
All right, great. So the way we're going to do this is I'm first going to walk you through a couple of slides as an introduction into evaluating a stock, what drives a stock from, let's say, for example, $50 to $100, right? What are the moving factors and the variables so that you can have a very systematic approach or a formula that can be applied to any other stock. And then we'll dive more into the actual presentation on Facebook so that you can see what something really looks like when you put everything together. What is the final product? So let's go here through some of the slides that I've put together. And as you can see here, what is the ultimate goal? Things that you can walk away from this webinar. So the first one is understand the due diligence process. Where do you find the information? How do you formulate a story behind a company? And how do you do research? It's essentially doing your homework. The second one is how to apply technical skills. And what are some of these technical skills? Well, we're talking about accounting, financial modeling, valuation, like a DCF, comparable company analysis. Many students, obviously in our program, they hear these concepts or these buzzwords in finance, but don't really understand the meaning behind them. So with this webinar, we're hoping to give you more insight so that you can better have a clear understanding of what that is and what it means. And also, how do you arrive to a price target and come up with your own recommendation? Ultimately, this is about you being independent and learning how to formulate your own opinion on a stock and test your idea, test your hypotheses with the market. And then if you're right, great. If you're wrong, how do you reevaluate your investment thesis and where were the missing points or the blind spots that you had in your own investment thesis so that you can improve your game and apply a more refined and a more improved investment analysis process on your next investment idea. And lastly, apply various skill sets. I've mentioned this before on the technical side, accounting, industry knowledge, Excel, financial modeling. And as we move forward with the slides and the presentation, you're going to see what a final deliverable product looks like, whether you're doing an internship or whether you're working within an investment bank in the equity research department or in a hedge fund or in private equity. So that's the overall goal for this webinar, that we hope that you can walk away with some valuable information. Now, in terms of our table of content, first, how do you pitch a stock? What are the driving variables that determine if a stock goes up or down? And more importantly, what do market participants and professional investors pay attention to? And then we'll dive into our Facebook pitch. So here's an interesting slide that I've put together. And actually, I want to annotate some of this. So what causes a stock to increase or decrease? And we boil it down to four very simple variables. And at the end of the day, what really drives stock prices is growth, performance, and also the story. So every time you're looking at a stock, make sure that you're accounting for these four factors. The first one, what are the business conditions in the economy? Is the economy growing? Is it contracting? Is it at a standstill? Is there inflation being anticipated by the market, and what's interest rates? It's very important that you understand the current situation that the business you're evaluating or the stock that you're investing in is operating under. The second one is revenue growth, top line. We have our own analysis and research that encompasses or collects 59 stocks of data, and we measure various variables to help us better understand what are the main driving forces that cause the stock to increase. And one of those factors was looking at revenue growth, and we learned that companies that have revenue growth over 25% or higher over the next 3 years, when you're forecasting it, if it's over 25%, the likelihood of them increasing and doubling is exponential, and it increases. This is something that we actually have in our stock investing program, where we laid out a stock investing strategy known as alpha growth stocks. The third one is profit margins. Is your company generating more cash flow due to expansion of margins? Are they more profitable today than they were last quarter or last year? For example, gross profit, EBIT margins, EBITDA margins, and net income margin. To simply put it, per every dollar of revenue that they generate, are they keeping 10 cents? Are they keeping 20 cents on the dollar, or 30 cents on the dollars? That's 10, 20, and 30% margin. This is very important to understand and pay attention to when you're evaluating a company and reading their financials. Number 4, it's earnings per share growth. And this is a very important number. Why? Because as a shareholder, when you buy a stock, your piece of the pie, your claim to the business is in the form of earnings per share. Because after all expenses, interest expense, taxes, the remaining amount, the remaining bottom line is net income. That's what is available to shareholders to be distributed a dividend. So when we're looking at a company, we want to pay very close attention to earnings per share, because if that growth is high above the industry, then you have a stock that is generating cash flow, that is perhaps gaining more market share, and has a higher probability of becoming bigger, surviving, thriving, and becoming ultimately the main dominant player. For example, Facebook, like the example that we're going to be using coming up. And I have 2 examples here. One is Chipotle and the other one is Apple. Look at the upside that Chipotle experienced from 2006 to 2015, up 775%. Now, when you dig deeper behind the numbers and you understand the story, you'll see that Chipotle had a new concept, Mexican, healthy style food that was in a franchise model that basically allowed you to go and I think the average time to order in a Chipotle was under 10 minutes. And what they were able to do is introduce a new idea into the entire fast food restaurant industry that was actually a healthier alternative. And that resonated very well with American consumers. And over the years, they opened up many Chipotle restaurants, from going to 100 to 500 to 1,000 to 2,000, and it's now a giant scalable restaurant chain. And on the back of that growth, shareholders rewarded the company with the stock increasing 775%. Now, when you look at Apple, different industry, technology, but the same principles still apply. From 2005 to 2017, Apple increased almost 1,500%. Now, if you go to the fundamentals of the business, why did Apple increase so much? Well, they introduced the iPad. And I remember this back around 2014, when I was actually one of my first jobs when I was in college as a freshman. I was a sales associate at a Radio Shack. And I remember during the holiday seasons, they were selling like hotcakes. People were coming into the store asking for the iPad, and we couldn't keep enough in stock. There wasn't enough inventory to meet the demand. And that was the beginning phases of what has become a growth story for Apple that allowed them to become perhaps one of the most profitable and successful business in history. Them and Amazon is the other one. So go back and look at history and look at the revenue growth. Do this for yourself. Open up a spreadsheet and plot out Apple's revenue growth over the last 20 years. It's a very tedious exercise, but when you do that and you calculate the percent change in growth, going back to 2005 to 2017 or even today, you're going to see that during this period, revenue was greater or above 25%. And then margin expand, they introduce more products than the iPhone, the tablets that they have, and they basically change the way we operate. They change the way we receive information and how we communicate. So if you can identify those companies that have a better product, a better service than the rest of the competition, and revenues are projected to grow over 20% for the next 5 and 10 years, pay very close attention to that stock, because that could be a company that could become one of the main dominant player in that industry. And I cannot make that any more clear than by showcasing and illustrating these two examples. So I hope you gain some valuable information just from this slide alone. So with that, let's continue. Now, going back to the beginning of my introduction, I said, we're gonna walk you through a simple 3-step process. And when we talk about that 3-step process, it's number 1, understanding the situation of the business. And you only are able to do that is by performing due diligence and doing your homework. Most of the audience that we have in our community, they're college students. So as a college student, when you are studying for an exam, you have to read the chapters of the book. You have to learn the principles, the concepts, so that you can be prepared to take an exam. Well, when you're investing in the market, it's the same principle, the same thing applies. You have to do your homework on the business and understand the story. And that is known as understanding the situation of the business, and you perform due diligence. That's how you do it, and that is the proper terminology that we use on Wall Street as professionals. The second part of the equation is your technical skills. Do you know accounting? Do you know how to read an income statement, a balance sheet, a cash flow statement? Do you know how to forecast an income statement and those 3 statements in a business, as I have listed right here, financial modeling? And are you familiar with the valuation terminologies applied by Wall Street professionals? Comparable company analysis, DCF, precedent transaction, sum of the parts, and then more of the transaction-oriented valuation methodologies applied by the M&A team, like leverage buyout valuation. What is a private equity firm willing to buy for that business? Also, what is a strategic buyer willing to buy for willing to pay for a business? This is known as merger consequence analysis, determining what will be the accretion or dilution of a business. And if a lot of the terminologies that I'm throwing at you and I'm mentioning is new, don't worry about it. Hopefully some of this will become a little bit more clear once we get into the Facebook example. And then lastly, after you've performed your analysis, after you've done your homework and you understand the situation of the business, apply your own judgment. What do you believe the stock to be worth? And based on your own price target, is it overvalued, undervalued, or fairly priced? And do you have conviction behind your analysis? And then you can formulate your investment thesis and boil that down to 3 points. Do you have 3 reasons why you think the stock is a buy or is it a sell? So this is a very simplistic and compact way of evaluating and understanding our process. And we go a lot much more into depth in the analyst prep program. And ultimately, you're going to get to see what a final product looks like once we dive into the Facebook pitch. And just to go a little bit more in depth, to give you some of the key parts in the process when we go into subcategories, if you will, on the 3 steps that I've mentioned. Let me point this out a little bit more clearly. So step number 1 with your due diligence, one of the things you want to do is understand the business model of the company. Assess the situation. What's the story? Is the stock price up or down over the last 3 or 6 months or year to date? Look at that share price, because it tells a lot of, it releases a lot of information that the stock is up or down. And the stock is essentially a collective representation of the sentiment of other market participants. And once you understand that, you have one clue or one piece of the puzzle. The other part is understand the company description. What is their product and service? What do they do? Do you really understand the business? And if you don't understand the business because of its level of complexity, then you can move on and find another company where you can better understand it. You don't have to stay marry, as we like to say in the industry, to a position or to a company. Next is a popular term that we like to use. Find another company. Next. And lastly, industry. What is the competition? How big is the market share? How fast is it growing? What are the economics? So these are the three main points or piece of information that you should research and understand when you're focusing on performing due diligence. The second one, technical skills. Forecast your company's cash flow statements, the income statement and the balance sheet, so that once you know the amount of cash that they're going to generate, what do you do with that? Well, you perform valuation. And this is the fourth point within the second part, as you're seeing here. And this will basically just tell you, is it overvalued or undervalued? And then the third part is your investment thesis. And within the investment thesis, as I've mentioned, what's your price target, potential upside or downside on the stock? What's your recommendation? And do you have any catalyst or any variable that it's unknown to the market, but maybe when they report earnings, maybe when they report their clinical trial on a vaccine, if you're looking at a pharmaceutical company or a company that is developing a new product, once that information is introduced into the market that you have been anticipating on the backs of your research, that's the key information that all the market participants are going to realize that the fundamentals are changing and the cash flows or revenue expectations are now going to increase. And that's the moving piece or the piece of information that you've been waiting for that might get all the market participants to see what you were researching. And therefore, the stock will increase after that. That's what we refer or what we mean about having a catalyst. And then, of course, risk. Understand that even after doing all of your homework, you could still be wrong. That is one of the most crucial part of investing and being an analyst and being a professional is understanding that even after doing all of your homework, you could still be wrong. And you have to be willing to evaluate your mistakes, understand why you did it wrong, and improve on your process and apply it to another stock. We are in a probability business. Out of 10 ideas, you're not going to be 10 for 10. Out of those 10 ideas, if you're right 50% of the time and you minimize your losses, you're going to be wildly successful. And when you look at some of the most successful hedge fund managers, they're not right 60% of the time, 50% of the time. Some of them are right 40% of the time, and they're wildly successful. But the key part of this is they recognize it early when they're wrong, and they cut their losses. They're not stubborn. They don't marry a position. They reevaluate, and they are flexible in their ideas, in their views, which is very different than how you learn and what you're being taught in an academic setting, in a classroom setting where you are memorizing and understanding concepts and theories, and then you're giving an exam, and it's either you have the right answer or the wrong answer, and based on that, you get your grade. Well, in the market, it's a little bit different. You could have the right answer, and you could still be wrong and lose money in the market. So a lot of it is about learning yourself, your strengths and weaknesses, and recognizing when you're wrong and quickly adapting, improving on that knowledge, and having a fresh start when you're evaluating a new investment idea. So this right here encompasses everything that we're now going to show regarding the Facebook presentation. So with that, let me pull up the presentation that Jess put together here, and we can now have a conversation about your presentation, Jess, which, by the way, I think you did a really good job putting this together and understanding the situation with Facebook. So the first thing that I'll ask you, Jess, on this slide being the overview on Facebook, and I see here that you've broken down into 4 parts: the situation of the company, what is the industry outlook or the current sentiment on that industry, what do other Wall Street analysts think about the business and their price target, and of course you have your own take and your own recommendation. If you can just simplify, Jess, on this slide I see here Facebook has increased about 6% so far this year, give or take. What do you think, or what interest, or what did you learn most about Facebook when you were going through this process?
Just to clarify, that 6% is when Facebook's market closed on the date of its first quarter earnings released. that first quarter's earning
Yes.
caused the stock surge to 6% just that day. And that was just incredible. And Facebook increased to 14% total from since the beginning of this year. And I see Facebook as a growth story because Facebook has constantly improving and developing their businesses, providing a better environment for the marketers on its platform to advertise and attract more consumers to their businesses, also providing a good environment for the users to have their unique experience on the platform.
Yeah.
And I find it unique about Facebook's operation from when I was creating my presentation was that Facebook actually have wider range of product than I thought. I learned a lot of new things while I was doing my presentation. So Facebook, besides Facebook, Facebook also owns Instagram, WhatsApp, Messenger, Oculus, which is a VR and AR technology, Navi, Portal, and Workplace. So they help people to connect socially, also professionally. They're doing a lot of good things to helping the community and also small businesses, and that also helped with their revenue growth and be able to provide a better community and a better business in the future as well.
Okay. And I'm highlighting here, mark in red on your slide. The first one that I'm noticing, 2.85 billion monthly active users. I mean, guys, let that sink in. 2.8 billion monthly active users. To put it into perspective, the US population is 331 million. 331 million, and Facebook has 2.8 billion. World population is approximately 7.8 billion. So Facebook in the digital world within their platform has accounted a large portion of the world population. I mean, it's astronomical. And then the revenue numbers, right? 2020, fiscal year 2020 net sales increased 22%. And then Q1 net sales increased 48%. They have 68% in the US social networking site industry. That's their market share just in the US alone. And then when you look at the Facebook dominates social media at a global level, the global market, 72%. And it's just astronomical. And this is some of the reasons why, if many of you follow Facebook or you see in the media a lot of criticism relating to this business, and a lot of the questions and concerns that people bring up, and they bring it to Congress and say, look, you need to start regulating Facebook and break it apart because it's starting to operate like a utility, and the amount of influence that this business has is tremendous, where it can really influence political discourse. It could influence politics. It could influence the structure of society. And we've seen it already with the previous elections. We've seen it in other countries. And, it really, you begin to open up discussions on whether are they doing more good than bad in society. But that's more on a political and on a social aspect. But when you look at the business, from a business standpoint, what they've been able to do and create is nothing short of amazing. I mean, the level of margin, as we move on with these slides, you're going to get to see what they've been able to do. So tell me a little bit more, Jess, about Wall Street sentiment, because I see here that you have analysts from Deutsche Bank, a price target of 355, JP Morgan, 360, and then you have Morgan Stanley, they have a 345 price target. What's their take or their view and their sentiment on Facebook?
So Wall Street analyst sentiment is mainly remain bullish on Facebook stock. They report their research report at the end of January, mainly concerned with the IDFA headwinds of iOS 14 changes from Apple, because they limit advertisers and small business rights to collect users' data, be able to provide them personalized content, and that is a potential risk for Facebook because majority of their business are generated from ads. So Facebook mitigate this issue with their aggregated event measurement, which is a solution that they come up to help the advertisers and small business to continue their web measurement and be able to provide personalize the content to their consumers and keep up with their business and
Okay.
increase their revenue sales.
Okay. And also, I see here for our own education portfolio that we have in the community. So you had a buy rating for that. You had a $380 price target, which represent a 20% upside, and then you had your own stop loss. How did you came up with this 380 price target?
So my 380 price target are mainly from two perspectives. The first perspective are from the information above. So looking at the company's operation, the industry environment, the Facebook is in a strong and growing high competitive environment, and also Facebook is operating competitively with high growth of revenue. From their first quarter, their revenue increased to 48%. So I have confidence with Facebook's future development. So that's why I remain bullish on Facebook stock. And then I come to the technical analysis. The numbers price target is based on a 19 times EV enterprise value over the 2022's EBITDA number, and then 28 multiples with the price over 2022's diluted EPS, and then 8 times the EV over sales number.
Okay.
And also I used a blended average of different methodologies, including DCF analysis and company valuation. And to give the public more explanation on my DCF analysis, I employed a 9.9% of WACC number, which is the number that the company is expected to pay, average number that they expected to pay for their security holders, and by using a beta of 1.3, and then 20 times multiple for EBITDA, and 5% of long-term growth, which is based on the global social media market growth, that they have a compounded annual growth rate of a 32%. And just that confirms my conclusion with how strong Facebook is living, how strong the market Facebook is living, and I remain very confident and also bullish on Facebook stock, and that's why I'm giving you
Okay. Wow, thanks. Thanks for that. So let's see right here. So this goes more into Q1 and their earnings results, and this is just amazing in terms of their performance, what they're able to do at this level. And I know, okay, and you put here on your investment thesis that when they reported earnings, the stock increased about 6%. And we're going to pull up the chart. That's one of the technical analysis side, just to see how the market reacted, and more importantly, the accumulation of shares that happened on that day when we look at the chart. So that's something that we're going to pull up. But to give everyone else that's participating in the webinar today, let me walk you now through the slides so that you can see the three-step process that I've mentioned: understanding the situation overview, applying technical skills, and then coming up with your investment thesis. All of that is summarized on this slide. But when you go and dig deeper, here's the level of skills and research that we had to develop, or Jess had to put together in order to be able to do this. So this is understanding what other analysts are looking at and reading their research reports. And these are other professionals, by the way, that are putting together this analysis with years of experience. And Jess, what grade level are you in right now?
I'm a junior.
Okay, so you're a junior in college doing this level of analysis, where Wall Street professionals with 3, 4, 5, 6 years of experience are doing. So this is one of the things that we're definitely doing at Romero Mentoring, is to accelerate the learning curve so that the next generation of research analysts or investment analysts are getting the information sooner rather than later, and start to share the knowledge, start to educate the rest of the public on investing and what's really happening with the business. So this is a company profile slide. This is all part of the due diligence process. Here's all of their assets that they own: WhatsApp, Instagram, VR, AR, connectivity. I know they also own Oculus. Let's see here. This is Facebook North America demographic users. Global presence, all of the users globally. Financial performance, annotated stock chart, industry overview, competition, economic indicators. Remember, I talked about understand the situation of the economy. What's the environment that they're operating in? Okay. And then the financial model, the technical skills. Here's the income statement, the margins and her assumptions, the balance sheet, the cash flow statement. Okay, valuation, comparable analysis. President transactions, DCF, her football field. Okay, and then her investment thesis. Good, good. So let's pull up the chart here. So let me change screens. And this is our program overview. Let's go to charts. And this is where I get a little bit more of an edge when I'm looking at the charts of Facebook. So let's come right here. Let's type in their ticker symbol. Let's change this to a weekly time frame. And there it is. So you could see when they reported earnings, what happened on the week that they reported earnings. Number one, look at the volume. This is the share activity or the shares traded on a daily and for that week. And you can see that the stock also increased on a positive note, increasing about, what's this increase for? Wow, this is almost 10% for the week. So on the back of earnings, the stock increased for the week about 10%. So here you're seeing the clues that the big institutional investors are leaving behind. They're accumulating shares. And this is also happening right around a very important inflection point after breaking their all-time highs. Notice that the stock was consolidating, right? The price action, and it's breaking now to all-time highs. So this might be the beginning of another wave to the upside where Facebook could hit or reach just its $380 price target. So I feel that there is a higher probability that this might happen because of the fundamental story, high growth, earnings, revenue, the increase in users, and also the price action. The amount of shares accumulated that week by institutional investors and other market participants, that's the telltale sign. That's the key indicator that I'm looking at. And when we zoom out and look at a bigger time frame, you can see that Facebook stock, it's right around all-time high. It's starting to create another major move to the upside. And let me put this into perspective. Now, hindsight is always 20/20, but if we use precedent as a case study to teach us very important variables and inflection points and what is likely to occur when the company breaks to all-time highs on the back of revenue and accumulation of shares. What happens after that? Well, here's what I'm referring to from an example standpoint. Let's go back to 2014. See here down here? They broke that week, and look at the volume. Look at that sharp uptick in volume. That's shares accumulation. They did it here as well, okay? They did it here. They did it here. They did it here, all right? They did it here. Now this week right here, this was, I believe, on the back of regulation and some negative headlines from the press, and also I think earnings weren't as good as the market expected. So the stock came down. This is why Jess had a stop loss in her price target. In the event things go south, in the event your thesis doesn't work. Remember, we are in the probability business. But look here, when it broke this area right here, see, moved higher. Now it's breaking again. Is this now the beginning of another leg to the upside where we have our own price target of 380? Okay, so this is more how we read the charts, how we anticipate the price move, and how we combine fundamental research and the technical skill set to give us an edge in the market and combining it with technical analysis. All right. So with that being said, any final comments or takes on your analysis on Facebook, Jess?
I just want to say I really enjoyed analyzing Facebook and learning new things about Facebook. And I haven't used the Facebook for a pretty long time, but after doing my presentation on Facebook, I think I might download the app back and explore the new world again.
Okay. I think one more final question. You know, this took a lot of time, and I know you put in a lot of work into this. For the viewers, what would you say was the most challenging part of doing all of this homework and putting it together? When you take a step back and you see your final presentation and your final product, what was the most challenging part of doing this?
The most challenging part, I would say, is time management, because I complete this project with the deadline you give it to me was 2 weeks while I was in school. So I think creating a 40 pages of presentation, including the technical analysis that I created in my Excel sheet, really consumed a lot of my time while I was in school. But I was able to arrange my time, work hard for school, as well as provide a detailed presentation. So that helped me to be more productive in both school and Romero mentoring.
Okay, so time management. It's a very important skill set that you need to know how to implement when you're putting together a presentation like this. So it's really prioritizing schools, your extracurriculars, your responsibilities, your projects, and really not waste time. Not waste time and having a list of things you need to get done on that day so that you're increasing your level of productivity and then be able to do this. Okay, so thank you. That's a key insight. So with that being said, folks, we'll end the session here. And with that, take care, and I'll see you in the next one.